Hey traders, checking into the stock market today. Some impressive defense from the bulls, minimal consolidation leading to daily bull flags. We'll look at what resistance levels lie ahead. I'll go over a trade where I got too fancy and too zoomed in, and we'll see where we stand. All right, so we had a bearish pre-market start, and that was when Microsoft came out and said that they were lowering guidance for Q4. So QQQ and a bunch of tech names all responded with that. And you can see we were trading at 411 pre-market, and then by the time the bell rang, we opened a couple dollars below that. So a little 0.5% drop. With that, we had a very overextended 15-minute time frame on futures chart. So headed into the morning, okay, we got a little bear lean because the bears clearly are following through on short-term time frames, but also knew that the 15-minute RSI was crushed, so started looking for a 15-minute oversold bounce. And what better spot for that to happen than right off of, we're on the wrong day, right off of the low of yesterday. And so the way it played out is we set a low, some lower wicks of bulls buying the dip. We stayed weak. We hit a lower low with zero follow through. That lower low held the low of yesterday. Then we got a nice solid bounce. At that point in time, I said, that's a really impressive hold by the bulls. These daily charts are shaping up with very healthy consolidation at this point. Some names like CCJ in uranium was already standing out as a lead bull and shaping up a daily bull flag. NVDA was standing out as a clear lead bull at that point in time. And so I made that statement literally right at the top. And I thought, oh man, did I just jinx it? Because we just fell straight down to a new low of the day. I thought, well, consolidation's still going, but SPY bulls played defense yet again, and that low of yesterday held by 11 cents. So a base of support is now established, and from there we just V-shaped bounce, and at that point it was off to the races for the bulls. So essentially think about what happened. We had yesterday signs of daily consolidation underway, loss of the hourly uptrend, some bulls taking some profit, a bunch of bears jumping in, and those bears are saying, all right, we had a solid bounce, it's time to head back down for daily consolidation. And they were right. We started that daily consolidation. What today did showed a lack of any follow through for the bears. And as soon as that lack of follow through started shaping up, bulls were buying the dip. And then that forced shorts to cover because anybody that went short in the last 3 days is in the red. So anybody with a proper stop loss, it's part of shorts covering and it's part of bulls buying the dip. This is a good sign for the bulls because, again, the last time around, and we've been doing a lot of comparisons to the last time, how this daily consolidation was fairly similar before the bounce got going. Of course, we've been talking time and time again about the QQQ divided by SPY chart, which has to be bouncing if we're going to trust the bulls. And it is. It's doing exactly what the bulls want to see as far as QQQ and the NASDAQ leading the way up. So we're seeing signs of exactly what the bulls want to see. And last time around, we didn't have daily consolidation until very briefly. And again, as I mentioned recently, the bulls would love to just keep setting little levels the whole way up. Just give us support levels to be working off of. Because again, every time that daily consolidation starts, bears jump in. And if you keep pushing them out, that helps the buying power, the buying pressure keep up. So very impressive turnaround. We, of course, saw all of our major sectors up at the high of the day at the same time for a good bit today once those bulls really got rolling. And look at hourly oversold conditions. So again, the things that we were watching for clues during consolidation. What does volume look like? Nothing notable. So not even really paying attention, but nothing notable. Hourly oversold conditions. Look at SPY's hourly RSI. Bulls front ran it, meaning that hourly RSI dropped down to about 34 at the low of yesterday. XLF was hourly oversold. XLV was hourly oversold. SPY and QQQ did not get hourly oversold. That shows aggressive dip buying. So I have mentioned in the past, the strongest uptrends, hourly oversold marks our daily higher lows. Here we have a daily higher low marked by an hourly RSI of 34. And what I mean by front run is I mean skipping in line. If you got people waiting in line saying, all right, I'm going to buy when the RSI is 30, someone can skip ahead and say, I'm going to buy when the RSI is 31. I'm going to buy when it's 32. And so when you front run it, you are buying before that trigger. So again, it shows aggressive dip buying, obviously. What we need to see here for confidence, I mean, obviously there's a lot of bull confidence after today for bounce continuation, but to end out the week, bulls really want to see an hourly higher low into continuation, because technically this move is coming off of that double bottom, and yes, it is an hourly trend change back to the bulls, but we want continuation. Again, same thing I just talked about on the daily. Consolidation, the clues we watch for on consolidation, we can apply that to the hourly, and bulls want to see a healthy retracement and continuation to keep that bounce going. So bull flag on the daily is confirmed. Next price level, we've got a resistance zone in the 429s, but what I care about before that level, as that level is still 3% away, I care about the weekly EMA 12, and that's 1% away. So watching that weekly EMA 12 closely, and again, looking at the bounce retracement size, feels like the bounce is only really just getting going, but here we are already up 45% from our lows, which means we are creating space for a weekly higher low to try and form next time we consolidate, whenever that is. But I'm not looking for weekly consolidation until we get some red flags on the daily time frame. And the bulls love the fact that they back tested and held EMA support for that daily higher low. So big win for the bulls. And now what that does is it gives us a clear benchmark level. And what I mean by that is this is now a very key support level. So as I just mentioned, I'm not looking for a weekly pullback until we see red flags on the daily. That's now my red flag. If we're holding 406.93, the bulls are fine. They're keeping control of this bounce. If we lose that level, weekly consolidation is likely shaping up. So that's another benefit for stair stepping on the way up, is you get these benchmark levels to go off of. If we look at the last time around, we had a period where, okay, we've been bouncing very significantly. There's a lot of pressure on the bears here, but where's my level to play off of? It was way far away, nothing nearby. So having these levels nearby is nice for technical analysts as far as having clarity and having something to go off of. So QQQ leading the way. Again, low of Wednesday broke yesterday by 60 cents. Low of today broke by 33 cents. Those are two bear breaks with zero follow through. Breaks with zero follow through means scout wedges, not wedges, scout flags. And it was a bull flag. So it's confirmed. Next resistance zone is at 330, triple top, key level. Weekly EMA 12 resistance is also, nope, it's at 320, just above 320. So that weekly EMA 12 will come into play before 330. And again, the retracement size is less significant here, but we're watching it as well. It's 382 at this point. So the NASDAQ needs to continue leading to be playing some catch up to the S&P 500. And again, the hourly RSI did not come close to oversold conditions. And here we are seeing continuation. So good sign for bulls all around. But the NASDAQ bulls definitely want more follow through to try and eliminate probabilities or decrease probabilities for the weekly bear flag, which is still possible, but a lot less likely after today. Semiconductors, daily bull flag confirmed. Gap fill at 237.13. Nice continuation into the higher high. And the next level is 253.27. Benchmark level, daily higher low is 237.61. So again, everybody's giving us a key short-term support level now. Bull cross of the EMAs is a good sign. Weekly EMA 12 resistance, we're already over it. So nice bounce, follow through NVDA. Again, it stood out as a lead bull very, very quickly today. Look at what QQQ was doing on the morning. Look at this pullback right here. So 20 minutes of green, okay, nice bounce. 10 minutes of pullback, retracing half of that bounce. What did NVDA do during that period? No 5-minute consolidation. I take that back. It did very briefly. Look at the retracement size. The retracement size was not even comparable. 50% retracement versus 37% retracement. And the bulls just kept on the pressure from that point forward. I did add on, I don't know exactly what I've been saying in these live videos or these YouTube public videos because I don't upload one on Friday, but I have been adding some IRA positions because my IRA has been mostly cash aside from a SPY position that I added on the CVID dump a couple years ago. And so I am deploying that capital over the last 5 trading days or so, just in case this is a longer term bottom. I would rather have losses on some entry attempts and have us drop to lower lows than have this be a longer term fear bottom that I didn't take advantage of. So I doubled down on my SPY longer term no touch position Friday pre-market. I added some NVDA pre-market at 181 on Friday. I added to that and I averaged up today. And I'll try and make a video about averaging up sometime soon. But during this consolidation, added to my 181. And so now I've got as many shares as I want in NVDA. I also added to the metals today. I'll talk about that a bit. And again, just looking for longer term cycle shifts. And it's still very early and the probabilities are not high enough for me to be going aggressive, but it's definitely high enough. Again, if I'm mostly cash, I'm putting some of that cash to work just in case. So NVDA, lead bull, daily bull flag confirmed. Next resistance level 204. Weekly EMA 12 coming into the picture. Tesla, weekly bull flag confirmed. Not a ton of follow through at this point. Bulls are looking for hourly higher lows next consolidation. We can see Tesla consolidated into the afternoon. QQQ did not. So we started to see a little bit of relative weakness there. But all individual names will be looking for hourly higher lows next time we consolidate, potentially tomorrow. And again, we're just going to keep getting clues. How aggressively are bulls buying these dips? And the amount of hourly retracement that we see before we set a higher low is going to give us some of that information. So Tesla hourly consolidation is already underway. The next resistance level after the high of 792, we'll look at 800 psychological. And then really we're just looking at the high of each day here. Weekly EMA 12, we'll be watching that as well. Bigger picture, looks like we got a downtrending support line. And as far as resistance is concerned, well, we could still be, I care about candle closes, which is why these candles are sticking way out. I care about candle closes for my trend lines. Anyways, we have a benchmark level, new key short-term support, 726.20. And the key for averaging up is, now that I've averaged up on NVDA, I can move the stop for my entire position to 181.22. So averaging up, you have closer stop levels nearby. So yes, you're lowering, or I should say you're increasing your cost basis, but the positions that you add to that can be more aggressive have closer stop levels nearby. So my initial NVDA entry, I'm going off 155 support. But now we've got a new level of support at 181, and I can now be going off that level and greatly reduce my risk, even though I am increasing position size. Financial sector. Hourly oversold conditions yesterday. Is that marking our daily higher low? Potentially, it's an inside bar. If it breaks bull, our daily higher low will be 34.57, and we'll then be looking at the high of 35.74 to try and confirm the daily bull flag, trying to follow suit with a lot of other individual names today. XLV has been our lead bear the last 3 days very clearly, but a big old bullish reversal candle. We have to change the hourly trend still. So burden on bulls tomorrow to confirm an hourly trend change. If they do, daily bounce will clearly be underway, and it'll be all about 134.05. Bulls would love to get back over 134.05 and negate, again, I've been pointing out this potential head and shoulders. Bulls would love to negate that with the higher low and higher high, in the same way that the metals just did the same thing. I'll show that in just a moment. IWM daily bull flag confirmed. Nice strong close at the high. Next resistance zone, 193.93. Daily higher low is 181.77. Weekly EMA 12 resistance coming into play, but it's the daily higher lows that we care most about at this point. Plenty of space for an hourly higher low to form next consolidation. So again, if we gap up tomorrow or we open lower tomorrow, we know the next time we consolidate on a name that looks like this today, we're scouting an hourly higher low. And that gives the attention towards the bulls. Again, if I enter every morning as a day trader not caring what direction I'm looking at, if I'm trying to determine the most likely scenario, I am much more confident in the most likely bull scenario now because of a day like today than I am the most likely bear scenario. So that has me patiently watching for hourly consolidation and looking to buy for hourly higher lows. Just like on the way down, patient bears would just wait for an hourly lower high to be looking for re-entries. So with IWM, you can see IWM looks just fine for the bulls, and it was actually a lead bull for the morning initially today, and then QQQ bulls took over and caught up. But there are other sectors that are still very weak and not really participating in this broader market bull move. And so what we will be looking for, if this move, every green day that we see from here, again, just imagine your sentiment gauge for the market overall. Every green day that you see, a few more people are convinced, oh man, that was the low. So the more we run away, if we keep going up and see bounce follow through, the more people are going to look at that and say, oh man, Netflix is already up 25% off the low. And SPY is already up however many percent off the low. I don't want to chase that. I'm going to look to the names that haven't run yet. That's where the laggard action comes into play, where we see it within sectors. A lead bull will run and then the rest of the sector follows suit, or we can see it in market wide. But the key premise is you have to see continued broader market strength. The other thing that you see is not only people that missed the move and have cash on the sidelines they want to deploy, it's people taking profit. So if someone's up 30% in NIO in 2 weeks' time, all right, well, I'm going to take some profit there and then put that profit to work in the names that haven't run yet. So the names that have not run yet that stand out to me, cryptocurrency is definitely still acting as a laggard. Bitcoin is correlating to the broader market. It's just weaker. It's trying to set a daily higher low as well, but it's not looking like a daily bull flag. So keeping an eye on crypto and crypto stocks, MARA, still a clear daily downtrend, trying to hold the recent low. So I watch BTC USD divided by NAS 100 USD, which shows me the Bitcoin relative strength against the NASDAQ, and it's in equilibrium. And so this would have to break bull if we were going to see crypto bulls play catch up. So that's going to be very key for me. We can see the last 2 days, relative weakness comparative to the stock market. So that's one place I'm keeping an eye out for. The next place is the biotech sector, because we have a triple top of resistance that has been rejecting the bulls consistently, but we have a double bottom of support now, or triple bottom, 66. All I care about right now for XBI is 66 and 71.57. And right now we're $2.77 above support, and we are $2.80 below resistance. I think that math's right. Which means we are exactly in the middle of this range. But it's nice and sideways, and it's nice and tight. And we know that we're going to break this range and see volatility. Now, we don't know whether we're going to break it bullish or bearish. Every green day that we see in the market, we're going to shift our probability for a bull break to act as a laggard. But let's go over my trade review real quick. So here's an example of being too zoomed in and getting too fancy. And shout out to Dinsey because she was live streaming today and then pointed out this 5-minute equilibrium, just really clear. And so I look at this and I say, okay, the stock market bulls are starting to show me something. XBI just held $66 for a third time, key daily support. And I'm looking at this and saying, okay, I'm looking for a bull break to then follow along with the broader market strength that we're seeing on the morning. And so I got a little too fancy. I need to zoom in and see exactly where my trade was. So here is, I looked at this and thought, I want a bull entry. But at the point in time when I looked at it, it was right here. So I'm not going to make a bull entry right under multiple resistance levels. I'm going to be looking for, ideally, a rejection. I make an entry on a higher low, and then we get the bull break. So I look at that, and I went bearish for that resistance rejection. I was playing off of 67.40, and I made a good bearish entry in the 67.30s. I was trading LABD, the leveraged ETF, and it pulled back on this 2-minute candle real quick and thought, oh, that's a nice top fish. All right, I'm very quickly in profit on this trade. I sold partial, and I thought, all right, a little more pullback, I'm going to exit my bear and I'm going to go bull. And then we got the turnaround real quick into a 2-minute bull flag. And I stopped out break even. So granted, I didn't lose anything, but I missed my bull entry. And obviously we got a lot of follow through. In LABU, it was 548 that I would have been in. And again, big time move to the upside. So I got too fancy. I thought, oh, well, I'll trade bearish and then bullish rather than just completely focusing on one direction and waiting for the trade to come to me. I would have been much more prepared if I just completely eliminated the bear side of the equation from my mind. So the confidence came from the bigger picture daily chart, the $66 base of support, the broader stock market strength, but trying to zoom in and play counter all of those bigger picture things is where I went wrong. So money left on the table, and that was my lesson for today as far as a mistake that I made. Other sectors that are still potentially laggards, we certainly know cannabis has been crushed forever. And again, I am looking for the fall voting season to have a catalyst. North Carolina just passed in the Senate. Medical, never thought I'd see the day. Granted, it's very restrictive for only the worst of the worst medical conditions, but it's better than nothing. Anyways, into the fall, we are looking for more states to legalize recreational and medical in November. So that's a dangling carrot that we have in the back of our minds. We know there will be positive media coverage for the sector into that event. So what I'm looking for is towards the end of the summer or whenever it's going to happen for bulls to front run. Again, this is just a trade over the last 11 years. I can't tell you how many times I've made this trade into the fall of a voting year. Probably 4 or 5 distinct times where it's just like clockwork. But that's still a ways away. That's 5 months away. So CGC is still very weak. TLRY is standing out a little bit stronger. And again, it's just getting real tight. Look at all the volatility back here. Huge volatility in both directions. And now we're tightening up. So we know volatility is going to return in all these tight places. And it will favor a bull break as long as the broader market bulls keep stair-stepping up. But for now, daily downtrend still clearly intact. TLRY bulls have to confirm an hourly trend change by breaking the high of today tomorrow, and then we're going to look at 475. MSOS and USMJ just sideways and flat. So again, volatility is coming to these sideways ranges. It's just a question of, do we trade sideways and then the broader market bulls stumble and fall on their faces and the bears show up out of nowhere with big bear volume and all of our sectors dropping to the low of the day at the same time? If that happens, these can all be weekly bear flags. But if the broader market keeps bouncing, keeps setting daily higher lows and higher highs, we're going to anticipate that these are going to break bull and act as laggards. So that is these are definitely getting my attention over the next couple of days. One other note on crypto. Crypto did this exact same thing last week where the broader market bulls showed up and crypto did nothing impressive whatsoever. And we were very weak comparative to the broader market. Then the weekend rolled around, stock market is closed, and we had an extra holiday day in there, and the crypto bulls played laggard catch-up with a big green dead. So I'm watching for the same thing. If the stock market closes strong tomorrow, and we have that bullish sentiment into the weekend, I'm going to be watching to see, does crypto act as the laggard again? And does the BTC versus NASDAQ chart, do we get another solid bounce and a higher low playing some weekend catch-up? But it's important to me how the stock market closes tomorrow and whether we keep that bullish sentiment and momentum into next week. The dollar, big pullback, potentially a lower high being set. If we drop down and break 101.29, daily downtrend confirms, weekly EMA 12 will potentially be lost, and that'll be a solid win for the bears, which is a good sign for market bulls. The 10-year is holding on much better. The VIX broke lower lows. Again, I'm looking for a weekly higher low on the VIX compared to 1845. But good sign for market bulls, the fact that the VIX is seeing the lowest level in 5 weeks. Gold and silver, talked yesterday how They were positioned really well considering what the dollar did. So bulls were very pleased with the day yesterday, considering the dollar was very green. And now the dollar is red today. And here we are trying to negate these bear flags. So again, the weekly weak bounce. But if we get this higher high, the probability of a weekly bear flag is much less likely. So currently a little double top for gold. Next key level will be 1900 and 1910. Silver also still has some resistance. Have to get over 2245. So again, I just added some positions today, and I'm going off the low of yesterday. Because if the low of yesterday breaks, that's a weekly bear flag. If the low of yesterday holds, it's not a weekly bear flag. So these are positions that, again, longer term mindset and just deploying some capital in a mostly cash stagnant for a while IRA. And looking for a monthly high or low on gold. A lot of work to do, but that would be ideal. Essentially, I'd like to see the dollar hit a longer term top into monthly consolidation so that gold can set a monthly high or low, and so that the stock market can see more bounce follow through. So I have a bull lean until the daily charts tell me not to have a bull lean. That about sums it up. Natural gas this morning, I drew this chart and said this is a bear's hopes and dreams. And we then closed at the low of the day a long while later. So great sign for the bears to reject from that resistance. And if we drop down and break 8045, we confirm a daily downtrend with a lower high and lower low for the first time in a long time. These drops lost support, but they didn't confirm bear follow through. So it will be different. That will be a character shift. That will have us saying that's the first time that has happened. When is the last time? It was back here. We have not seen a lower high and a lower low on the daily time frame. Yeah, it's been 4+ months, 4.5 months. If that daily downtrend confirms, weekly, we'll be looking for a higher low, but weekly consolidation will be underway. So aggressive natural gas bears certainly paying attention. Oil holding on just fine for the bulls. Bullish inventory reaction. Daily EMA 12. Daily higher low. Trying to shape up. And energy sector is going to see volatility tomorrow. How can I say that? Because we had 2 daily inside bars. You can't get any tighter. If they break bear, we scout a daily high or low. If they break bull, we're going to test the all-time high. Natural gas clearly weaker than oil today. And that is where we stand. So a very important day for me today to see how bulls aggressively bought the dips, the minimal dips. And so we now have the benchmark levels, which make things nice and clear. If these levels break, it's a big red flag for the bulls. And if they hold, they keep control of the bounce. They certainly want to head into the weekend with another green day to keep that sentiment high. And again, the goal for the bulls is to do what we've seen so many times. Fear to FOMO or FOMO to fear as fast as possible. And so this would be fear to FOMO as fast as possible, but not at FOMO yet. A couple more days like today, you better believe it. And again, it's just the amount of people that are either looking in the bearish direction or having cash on the sidelines, where every single green day starts to shift a few more people. It starts to convert a few more people to Team Bull. Keeping in mind, weekly timeframes will have to eventually change trends as well if we're going to see bigger picture, significant trend changes and sentiment shifts. Let's see how Microsoft ended up responding. How's that for a gap down for buying? So what have we seen now? A character shift in the sense that NVDA, bearish reaction to earnings. We gap down open or open right at the low. I don't think we gap down. We open right at the low, all buying. Today, MSFT, gap down open, all buying. So we're seeing some negative news being used as, or at least negative reactions, either way you want to put it, being used as buying opportunities. All right. Certainly very interested to see how we keep playing out from here. Things getting exciting, lots of volatility. Bigger picture, SPY 2-month time frame. Retracement size. Just saying, that is a very healthy longer term chart. Drop to a lower low, that changes. Hold that low, that's a bull flag. We'll see, one day at a time. Hope you're well, do good things. 30 minutes, what did I even say?
First echinacea flowers. Milkweed is starting to flower. The white is the yarrow, the orange is the milkweed. Monster rhubarb has gone to flower. Flower bed has gone to flower. Greens. Mustard greens are flowering. Chard and collard greens still doing well. Spinach is going to flower. Beets, radishes, winter squash, peas, carrots. Peas have started putting on fruit. Hilling the potatoes, summer squash, baby zucchini, beans, tomatoes, cucumbers. I'm just gonna have them climb up that table. Zinnias, basil bed, sunflower bed, salvia bed. I already took all the garlic scapes, made some lazy man pickles. Just got pickles that I like at the store and ate the pickles and stick the garlic scapes in the jars. Gonna climb more hardy kiwis up this monster trellis as well. They can put on a few 100 pounds of fruit when they're full size.